Welcome to Fitz Factor, the show where you learn how to master the stock market with Dan Fitzpatrick, the stock market mentor. Dan is a savvy trader. He's featured regularly on Fox Business, CNBC, Investors Business Daily, and SiriusXM Radio. In this podcast, Dan shares his insights on trading, life, and attaining long-term success in the market.
Okay, every so often, I think, well, actually quite often, but certainly every once in a while, I think it's important to review prior trades, irrespective of whether they were profits or losses, whether they were great trades or not so great trades. It's just really important to go back and review, because what you're basically doing is studying your own behavior, your own analysis, your own decisions. You're studying those things in order to take something going forward. As I say all the time, because it's true all the time, the weakest link in the trading chain is you. And so if you're not self-aware and always striving for more self-awareness, you're really destined to repeat the same things. The old quote, I guess it was from Albert Einstein, who's apparently a pretty smart guy, said that insanity is when you do the same thing again and again and hope for different results. And that's true. I don't know about insanity. Maybe it's just human nature. I really think that's what it is. But if you're not reviewing your prior trades, then how are you not going to do the same thing over and over again? It's like you have to do the same thing over and over again, because that is your natural tendency. You do what your natural instinct tells you to do. And so if you're not taking in any new information in order to change your natural instinct, then there is no change. It's really called a growth mindset. It's really important to have a growth mindset in trading, and certainly in life, where the only way you can become a more self-actualized person, the only way you can become a better person, is to sit down and basically face your shit. Look and see, like, why am I doing what I'm doing? Pardon my language, but that's just the way it is. Sometimes you have to be emphatic like that. The only way you're going to change who you are, your present circumstances, the only way you're going to do that is if you look at your present circumstances, you take yourself into account. What am I contributing to my present circumstance? Am I a victim of circumstance? Am I a victim of someone else, something else? That's what's making me unhappy. Okay, well, so then you really need to think about that and go, okay, well, maybe, are there any changes that I can make? Are there any changes that I can make in my life? And I don't want this. I'm really not trying to get this into the secret of life according to Dan Fitzpatrick. Only secret to life that I know in that regard is that every time you get knocked down, just get up and keep going. But the point is, what I'm saying is true. What I'm saying is true about managing your life and always trying to have a growth mindset. Okay, fine. Seriously, only a narcissist would deny that. But how can that be true in life if it's not true in trading? How can you change? How can you adapt? How can you adjust? How can you improve if you don't know where you are? I say all the time, and I'm not the only guy that says this by any means, if you can't measure it, you can't improve it. So there are a lot of ways to do that, and I'm just talking about trading now. There are a lot of ways to measure your trades, and some of them are quite detailed, and frankly, I think those are the best. However, sometimes, you got to take little baby steps in order to get to where you really know you need to go. You just kind of have to do that, okay? So when you're looking at your results, look, seriously, if you're really happy with your results, if you're consistently making money, then this is what you need to do. This is the change you need to make. Do more of it. Do the same thing again and again. Do it faster, more often, with more stocks. If you're really happy with the results that you're getting, well, shoot, man, you got to maximize that. But if you're not happy, if you think you could do better, maybe you're still losing money. Maybe you're just not making what you feel you should be making, then there are some things that you could improve on. I won't even say you're doing things wrong, because who am I, who are you, who are anybody else to judge what's wrong? What I'm talking about is doing what works. If you're not doing what works, if you're doing things that don't work for you, that get you more towards your goal, if you're not doing those things, then you can't expect, it's insanity to expect to move towards your goal. It's impossible to do. That's just the reality of the situation. So first of all, you really need to stop and think. You really need to stop and think and say, you know what? Am I happy with my trading results? And if the answer is no, great. And then the next step is this, and this is a critical one. Am I blaming it on the market? Well, hey, the market's rigged. If I only had level 2 quotes, I need a better trading platform and all that. Those are excuses. They're not reasons. Those are excuses, and you're not going to get improvement by focusing on excuses. You have to think of reasons. And why are the reasons that you're not doing well? And it comes from the decisions that you're making. So the only way you're going to make different decisions is to go back, look in the past, look at individual trades and say, all right, geez, what am I? Sorry about that. The only way that you're going to make decisions is you go back, look in the past objectively now, because you're out of the trade. And you say, all right, let me analyze this. And guys, it won't take you too long. Let me analyze this and see what were the good decisions that I made? Did I get a good entry? And okay, well, maybe you didn't. But if you didn't, why? What have you done wrong? What changed that got you into a stock where, based on your knowledge and experience, wasn't the best entry to take? Maybe, as it turns out, the trade was working in your favor, but when you really look at it, yeah, you didn't manage the trade that well. Now, as they say, hindsight's always 20/20, but that's not what I'm talking about here. I'm talking about looking objectively at something that you were trading subjectively and seeing if you have certain tendencies. It's not just one trade that makes or breaks you. It's the aggregate of all the trades that you're taking and that you're making that really determines your success or failure. And so my suggestion is that you at least start with the chart. Start with looking back at the trades that you've made and focus on mistakes that you believe you've made, or maybe they were just, hey, you know what? I have a learning opportunity here. I see 2 or 3 trades that I've done that are not, I didn't manage them well. And so write that down. And then as you go forward, you're self-aware of the things that you've done that have not worked for you. And then you can be making better decisions on the trades that you're making now. So let me go through, not that you have a choice. I'm going to go through a few of the trades that we've made recently that have closed down. Some of them great gainers, others not so much. None of them bad. No big losses here. That's the first thing. If you're looking at a trade and you took a big loss at it, this is how you fix that. Go in the bathroom, look in the mirror, and slap yourself silly. Don't take big losses, period. Not even one. And do you know why? No insult here. Losers take losers. Losers take big losses. Traders take small losses. So that's okay. But what I'm talking about here is just kind of refining your process and going through trades that you've made and saying, that was my mistake. I did that. Oh, I did that wrong. Now, one thing that a lot of people don't know, I've read, about everything that Bill O'Neill has ever written and a lot of things written about him, and talked to David Ryan, who worked with him for many years. And one thing that Bill did was always go through his old trades, always. And he said that he could go back to every trade that didn't work out and pinpoint where he screwed up. Oh, the volume wasn't the way it should have been. Or, the price action was this or that. Oh, I bought too high. He could go back, and I'm not talking about all of his trades. I'm just talking about looking at his losers, going back on the chart, and essentially he would find on every single one something that he missed, something that he didn't see at the time that he typically looks for, and that tends to be there on trades that work out the way he expected them to work out. So we want to be doing the same thing here. All right. So let's go through a few of them today. And then I will be doing the same thing in another video here. So I hope this helps. First of all, we traded ARK and made a pretty decent return on this. You'll notice these stops. I put these stops in along the way because our entry here, was at 44, and we did withstand a pullback here, right? So the stock pulled back about 5, maybe 6% or so, and I actually think we got stopped out, but I felt it was a shakeout, and so I suggested, you know what, we want to stay in. So we're staying into this trade. We took almost a 6% pullback, and then over the course of three weeks, 17 trading days, this thing ran up 23%. Now, I don't really care too much about the fact that it ran up whatever it ran up from the breakout. What I'm thinking about is traders. I'm thinking about those traders that were here right at the low, big volume here. How well are they doing? And at the top, they're doing about 18%. And so you look at this stock and say, okay, nothing wrong here. It's hitting $50. It's all good. I like it. Keeps going. Okay, even more. Maybe I better snug up my stop. And you guys see how I've raised the stops along the way. So all told, everything good. The only thing maybe that I could have done differently is this. Okay, so this was the initial entry here. And that worked. It worked really well. It had a really nice gain. Up here, another entry, right? And so what I really feel like I missed is this one. I missed this entry because if you really want to look at the chart, that shows possibilities. Okay, this is a big deal. It shows a nice, maybe a small little green skyscraper, a little bit higher than average volume, a very good, and listen to this, closing location value, a CLV. Okay, this stock closed at 45.37. The high was 45.38. In other words, the only reason this stock closed at 45.37 is because the closing bell rang. So this is institutional buying. This was actually an entry point. Or you say, all right, well, shoot, I like the way this thing happened. If the stock trades above this intraday high, then I'm in. Next day, on the open, you're in. And then what happens? We'll say you get right at the open. Okay, you're already up almost 3% that day, and you get great confirmation that volume is high. So this is institutional buying. It's actually a continuation of this day. So I really feel like this was an action point. And I don't recall really taking action. And it could have been because, well, I'm already in here. I see what happened there, but it didn't really break out. So, I'm stock's kind of wearing me out, but I'm okay. Okay, that wasn't a good decision, even though the trades made money. And I'll tell you why, because what I forgot about was when you get heavy volume like this is institutional buying, and institutions don't buy it all in one day. Now, this is important. They don't buy every day, but they don't buy it all in one day. And so when we see institutional activity with such heavy volume, that shines a spotlight on the stock, on what institutions are doing. And so this is one really where it's like, hey, man, I got a tiger by the tail. I got to hang on to this. And then when you're right, you want to get paid for being right. So this was still a good entry here. This is maybe, the first indication when this was a gap and then it sold off. Still a high, a high day, higher intraday high, higher intraday low. But it turned out to be a pretty good day overall. But this is kind of it's like yellow light flashing, caution, yield, danger ahead. And it's simply because the stock went up 1, 2, 3 days in a row. And so you would expect some kind of a rest. Okay, so that occurred on the 12th. And then another big move. See, again, you still get higher highs and higher lows. And that's really a very, very important thing that people don't think about. People tend to just look at the open and the close. A lot of times, people use line charts and all they see is the close, which has always struck me as odd. It's kind of like driving with both eyes squinting. And the sun's not in your eyes. You need to see everything. But if you look at this, you'll see that higher intraday lows means this. The sellers here, the sellers were really strong on this day. The next day, they weren't so strong. The day after that, they were even weaker and weaker and weaker and weaker. So as each day that's gone by, sellers did not have enough supply, did not have enough power to push the stock down to a low that was lower than yesterday. And you could look at it on the reverse side and say, well, that means that buyers were more aggressive today than they were yesterday. In other words, the price didn't have to go down as far as it did yesterday before buyers said, okay, that's it, give me it all. And then the same thing on the opposite side. Buyers were more powerful at the high. They kept buying, and you get this high closing location value, meaning within the intraday range, where did this close? Where did it close? And so this move closed at the high part of the intraday range, and this one was essentially right at the intraday range. However, what I'm talking about here is the higher closes. Okay, this was really a low close relative to this, and after that, they're all high. So you've got a series of higher closes here. So what are we talking? As the trend moves higher, we see evidence of this. The bears are weakening, the bulls are strengthening. This is what we want to see. This is all a good thing. And so what I should have been doing is really pounding the table on this. I talk about higher intraday lows and higher intraday highs, but this was really a big move in this stock. And I didn't catch it because I was looking at other things. So my lesson, my takeaway for myself is, if you got a good one going, understand that the reason it's going is not because of me. I'm not doing anything. I'm just recognizing what others are doing, what the institutions are doing. And all I want to do is participate. I don't have to take any action. In fact, what I should be doing is just holding on. Okay, now this, again, higher intraday low, higher intraday high. But it's a little different because this closed lower than the prior day. So maybe institutions, I wouldn't say they're done, because this is just coming out of a base here. but maybe they're taking their foot off the gas. So that's something to think about. But again, higher intraday lows, look where this is tracking along the upper Bollinger Band, right? It's above the upper Bollinger Band for most of each day. And then we keep moving higher. So again, the higher intraday lows are keeping you into this trade, and they're not allowing you to be shaken out by the daily jiggles in a stock. You're looking at the overall trend. Now, I couldn't predict this. Nobody could predict this. And so this was one where we got stopped out. And you have to be setting stops. But how did we do on the trade? We did pretty well, rode it as long as we can. Now, would there be another way to trade this? Sure. I talk about it all the time, fractional trades, fractional stops. But I'm not really talking about that now. I'm just talking about from a technical standpoint, we're out of this trade. And then we look at the overall picture, and it's not a question of whether we think this is going higher. The question is there someplace else to put the money that we just got when we exchanged our stock for the money? And so here we are, present day. So that's really my takeaway on ARK is I should have really kept on it and traded it until it gave me a clear indication from the highs that that move was done. Not just a break of support, but really a break of the resistance line where it failed to confirm. So anyway, that is what I have learned on ARK. And as it turns out, this was a pretty good trade, but not as good as Marathon Digital. Now, Marathon Digital, we were in on the 20th here. We got in on this breakout day. We're watching this stock here. Look at the big volume, big, massive volume. If we saw this on this day, it would have been a good entry because of the volume, because of $10. Maybe you set your buy stop for a little over $10 because you're saying, all right, well, the stock's held at $10, so I don't want to buy it at $9.95 when there's only 5 cents of headroom before we can look for some kind of a pullback, or at least anticipate a pullback. So why don't I just wait and buy it at 10.05? Something like that. Well, I didn't really do it because I didn't notice it that much. Well, now I noticed it. And so this was actually a late entry. We'll say right down here. So this was a late entry. And so what do we do? What happens? Stock keeps going. I'm drawing these lines on our videos saying, hey man, this is what could happen. And the stock keeps going and keeps going. And I'm talking about setting partial stops. Look at the intraday highs. Look at the intraday lows. We're seeing the same type of thing. Even on the quote down days, look at the closing location value in the upper half of the trading range. Oh, that looks like a top. Nope. Keeps going. There's another one. Now, once again, what's happening with the intraday lows? They keep going higher. And so irrespective of stops where you're placing them, or even if you are, I would say this has been a trade that I managed pretty well because I stayed in. Everybody made a ton of money on this stock if you're trading it just according to the way that I had been suggesting. And so from our entry at 620 up until the high before this thing ultimately peaked, this stock went 80%. Now, it would be nice to get the 80%, but that's only theoretical. Let's say you only get the middle 60%. You get in 10% too late and you get out 10% too early. That's still 60%. Maybe you miss the 15%, or maybe you miss 20%. The bottom line is you can be trading with quote precision without getting the exact top and bottom by just managing risk. And I really felt like along the way here, the 8-day moving average was pretty good. So far, what I've learned here from this trade is the risk management was pretty good. See, I'm not just looking for things that I feel like I've done wrong or that didn't work. I'm looking for things that I've done right so that I could do them again and again. And so then the stock still goes up, right? Almost to $20. And still, like, I know what happens next, but still, we're really doing okay. I can micro analyze this and look and see, well, where is it relative to the upper Bollinger Band? That's kind of a waste of time on a trending stock like this. But what I do see is a poor closing location value here, like a high one here. I'm just talking about the down days. Poor closing location value here, a poor closing location value here as well. So this, I feel a little bit, I'm kind of moving towards the exits a little bit, but I want to let this thing keep going. Okay, now this 2 days in a row, this is not a good day. 2 poor closes in the same day. And the low of the day was 1695. And that was corresponding to this low. And so you could say, well, I'm still going to hang in on there, though. Just try to look at this objectively. Doesn't this look a little different? Doesn't merit look a little different from the 13th, which is a Thursday, to Friday, and then the following Monday, down again. And so I'm protecting it with a stop here at 1640. It's at 1695 on the low today. And at 1640, if you're in at 1106, we'll say here, if you're in here and to 1640, this is almost a 50% trade right here. And all you did was raise your stops along the way. And then the next day, stopped out, 1640. And that's the trade. So all in all, this was a good trade. I think it was a good trade all the way through. And so I've learned here, frankly, that my trading methodology works when I follow it. When I look at all the things that I'm looking at here, it works. And then, by the way, the other thing that I'm not even talking about is looking at the weekly chart. The weekly chart gives us a whole nother picture here about how this stock has based back here and has really continued to move higher. And one thing that I know that you don't is that there were some bonds that were issued on Marathon that had essentially 30% yield, 30% upside, not yield, but 30% upside, because they had an option to buy. And the reason that they were that the return was so high was that the consensus is this company is going to go bankrupt. They're going to go out of business. And so there are these corporate bonds that are issued. And the thing is, I actually tried to get some. And my broker said, okay, I'll try to get them for you. But, and I said, yeah, but only if you could get those. And he wasn't able to get them because demand was so high. And so that was actually the first thing that kind of brought me to this stock. And so I knew this type of thing, it wasn't really relevant to what we do, and who the hell knows what's going to happen. But I knew this. And so it really enabled me to kind of have more staying power in this stock. And so all in all, I would say this was a good trade. And I've learned a few things that I've just recounted. So anyway, that's it for this analysis. There are some others that I'll be going through in separate sessions. Okay. All right, you guys have a good day.
Thanks for listening to Fitz Factor with Dan Fitzpatrick. If you like this, then you'll love Dan's premium service at stockmarketmentor.com, where you can learn how to trade stocks, options, and cryptocurrencies. Click the link below and get access to real-time trading alerts, a community of traders just like you, and live training sessions each week. Get the trading edge that you need at stockmarketmentor.com.